I'm a college dropout, and some of the easiest money I ever made was in crypto. Here I am pulling up money to buy my dream house. But it wasn't easy from the start. Some of this took years of trial and error to really figure out what makes money in crypto. So I'm gonna talk about all the ways that I've made money in crypto, including one way that is my personal favorite, and it's made me hundreds of thousands of dollars by itself. But first, I'm gonna start with an option that I just love because it's so beautifully simple. Crypto lending. Put simply, you can lend out your crypto and earn interest on it. There are so many different ways that you can approach this. There's the simple and kind of profitable, and there's the difficult and potentially super profitable. For simple and just kind of profitable, there's good old stablecoin lending. A stablecoin is basically a crypto that's pegged 1-to-1 to the price of the US dollar. Right now, I have some USDC stablecoins being lended out on Coinbase. They're paying me 4.7% interest to essentially park some cash here and do nothing else. There's zero lockup period. I can put money in there for an hour if I want to. All you have to do is just put cash in or take it out whenever you want, and you just make money. This isn't an ad. I've only been lending here for a little while, and I've earned $1,371 in profit. The next level up from here would be scouring the web for other exchanges that pay slightly more than Coinbase. Now, there are some options out there, but that 5% that Coinbase pays is quite good, and they're a super safe exchange, so that's the reason why I chose them. But if you've been following my channel for a while, you'll remember that there was a time when you could earn 180% APY on stablecoins. This was during the 2021 bull run. I had about $400,000 lending at that time, and I was making $2,000 every single day in profit on cash. It made me hundreds of thousands of dollars in passive income doing literally nothing. That's the closest to passive income I've ever had in my life. So lending has an absolute soft spot in my heart because if you can keep an eye out, you can make insane returns doing this for relatively low risk. However, when the market is more chill, then you can expect returns more like 2 to 10% APY on stablecoins, unless you're willing to put in a bit more work. If you're willing to dip your toe in DeFi, you can really crank up your lending returns, like up to as high as 5 to 60% APY. Now, popular DeFi apps like Aave, they offer opportunities more on the small side of that spectrum, like 5 to 10% returns, which is great. But this is where it becomes less passive income and more of a job. There are people out there who are hunting for the best returns possible, like those 20 to 60% returns. And here's what they're typically doing to get that kind of return on a regular basis. They're on the cutting edge of new tokens and decentralized exchanges that are just coming out. And they're constantly looking for opportunities where there's a short time period where that token or that opportunity pays out disproportionately more than the market rates, like extremely high returns for just a short period of time, like 1 to 3 months. So maybe a new DEX launched and it's offering 50% APY for the first month. Those people would fly in there, get that 50% APY, and then they're out of there as soon as that deal is up. So they're constantly searching for those deals and only actively placing their money wherever it will get the highest yield possible. And then some degens go even further than that. When you lend out money on a decentralized exchange, you deposit your money, and in return, you get a new token in your wallet that represents the money that you deposited. It's kind of like a receipt, but that receipt is worth money because it represents an actual asset that is worth money. Like the receipt is as good as the money. So here's what the degenerates will do. Let's say they lend out $1,000. In return, they get that receipt that's worth $1,000. And that receipt also says, hey, you're making 10% APY on this $1,000. They then take that receipt and use it as collateral to take out more money. So they'll find a site that will allow you to borrow against your receipt and pull out, say, $600 in exchange for locking up that $1,000 receipt. And then they take that $600 and they lend it out again for even more return. You're essentially acting as a bank and creating your own money out of thin air. It's crazy, but people do it, and it's a strategy. Obviously, this increases risk dramatically, and it's considered a very advanced strategy. Don't do this if you don't know what you're doing, but it's exciting to see how far these things can go, and this will be the future of banking. Airdrops. This is a quick one, but it's such an easy way to earn some extra money by just participating in airdrops. An airdrop is where a crypto project launches a token and then sends free money to the users of their platform as a thanks for using my platform, and so they get a user base on day one. Now, most of these will be small, but I've seen people make 10K from a single airdrop because it's some project that they've been actively using quite a bit. My first 100x in crypto was actually because of an airdrop. I got a tiny little $30 airdrop. This was years and years ago. I totally forgot about it. I checked back in on a wallet, and I realized it had gone to $3,000. And I didn't even remember what it was at first. I was like, $3,000? How did I forget about this? So I look it up. I see that it went from $30,000 to $3,000. Boom, easy 100x. Obviously, that doesn't happen every time, but the strategy for airdrops is so simple. Use platforms that are likely to do an airdrop, and eventually you'll be blessed with free crypto deposited straight into your wallet. Now, over on FINOVA, we recently did some research on 9 potential airdrop opportunities. Here they are. They include Linea, Scroll, Grass, Fuel Network, Eclipse, and more. Staking. This is another quick one. Staking is where you lock up some cryptos that you currently hold in order to first help secure the network, and second, earn you some nice, juicy passive income. Now, in my opinion, the best use case for staking is to think of it as a nice cherry on top for cryptos that you already love and you're already holding. This is for a few reasons. First, staking pays out good rates, but not amazing rates. Expect like 4 to 12% APY for most major stakeable tokens and coins. StakingRewards.com, that's a great resource that shows you how much you can make staking various coins. And second, with staking, it's important to remember that you are locking up volatile crypto coins. No matter what crypto coin you're staking, unless it's a stable coin, it's volatile. If you're staking a crypto for a year, you can be 100% positive that there's going to be many ups and downs in that year. So there's always going to be the chance of losing more money than the percentage yield. You know, if you're expecting to make 5% APY, there's a good chance that that thing will wildly swing more than 5%. And because of that, it's generally best to just stake what you're already holding and just think of that nice 5% boost as a cherry on top of your holdings every single year. I've made about $10,000 from staking major cryptos over the course of a few years. But like everything, there is a degenerate version of this as well. Similar to lending, new tokens will offer introductory staking rates occasionally that are much, much higher than market rates. So a strategy that many people take is constantly staking the newest, hottest token and then leaving before the rewards dry up. It's essentially like a game of hot potato and can be extremely risky if you buy a token for the staking rewards and then it just tanks. Like that can and will happen. I've only done this once, and it was for a token called Hydra. They were offering staking rates at like 300% APY initially. I checked this thing out and I was like, this seems too good to be true, but it was on a major exchange. You could actually get that rate on a major exchange, and I couldn't find any reason not to do it. So I put in 10K, and within 2 days, it was worth 18K. I'm like, that's enough for me. I'm out. I sold it. That was my exploration into risky staking. Word of warning, where you stake is extremely important. In 2021, hackers exploited Cloudflare infrastructure to break into a project called Badger DAO, and they stole $120 million worth of people's money that was on that platform. And there was nothing they can do about it. So please, please, please do your diligence before depositing your hard-earned money into any random platform or website or token. By far, the safest route is to stick to the most reliable decentralized wallets like MetaMask or Trust Wallet, and stick to the big exchanges like Coinbase, Crypto.com, things that are actually known. And if you're unsure about an exchange, look to see if they publicize their current asset and liability holdings. I would avoid any exchange that doesn't. Crypto savings account. Another simple option I've used is opening a crypto savings account. Pretty much like a bank where you hold your crypto assets and then you earn a little bit of daily interest. This grows your money over time and it's nice. Like you don't have to do anything, you just make some money. There's some options like Binance Flexible Savings Program. That's on a reliable exchange. It allows you to redeem your funds at any time. That's super nice, but there's tons of other options out there, all with different rates. So don't just jump at Binance. Find one that works for you and your individual goals. Again, like staking coins, the big risk here is a platform collapse. So choose an honest, transparent platform. Crypto cashback and rewards programs let you earn crypto with everyday spending. You just use a crypto credit or debit card and you use that when you buy stuff and you just make money. Now, to be clear, you're not going to earn a huge amount of money doing this, but you will be making something, so it's not a bad option to just supplement your overall crypto investment or to just dip your toes into the crypto world and do it with literally no risk. Now, there's multiple options from reliable sources like Bybit, Crypto.com, Binance, Coinbase. However, there's many tiers to each of these services, so just make sure you pick the right one for you. DeFi liquidity pools. This can be an excellent strategy, but only if you know what you're doing. DeFi liquidity pool. If you're new to crypto, you're probably thinking, I really don't know what any of those words mean, so let me explain. On a centralized crypto exchange like a Binance or a Coinbase, buying, selling, and borrowing crypto is done using a third-party managed order book. and that happens pretty quickly. That way, when you go to make a trade, you can do it instantly. They just have money sitting there ready to trade. That means they can execute your order, and they do that with a third party or they own their order book. It's a centralized version on it. On a decentralized crypto exchange, it works a little bit differently. Users, like people like you and me, actually deposit their money into the platform to provide money to the platform, known as liquidity. They do this into an asset pool for a trading pair. So a trading pair might be something like Ethereum / USDT. That means you can trade Ethereum for USDT or the reverse. In that case, you would be depositing either Ethereum or USDT into the pool, and you would get paid out personally a portion of the transaction fees that the pool generates from people trading within that pair. It's a way to trade assets from one person to another without anyone having to look at it and saying, that looks good. Like, to be able to trade assets without a bank, that's insane that we can do that now. And all this sounds cool, but it can be iffy when it comes to making money. Some researchers have suggested that around 49.5% of users lose money on Uniswap v3 liquidity pools, which isn't promising, but it doesn't have to be that way. The problem is, as asset values shift within the pool, you can lose money. And it's another one of those scenarios where people who are making the most money are constantly hopping around and looking for the best possible place to deposit their money and earn the highest return, and then they're just off to the next place. I've made around $20,000 in profits doing this, providing liquidity, and it can be viable, but only if you're willing to spend the time. Only if you're willing to check on this regularly and continue learning more and more strategies to amplify your returns and reduce risk. Now, there are better options to make money for the average person that we'll discuss next. DCA into major cryptocurrencies. If there was a beginner-friendly tier list, this would absolutely be at the top. And that's pretty good because I've made hundreds of thousands of dollars in crypto from this one strategy alone. This is my most profitable strategy, and it's also the most beginner-friendly. Dollar cost averaging is where you invest a regular fixed amount into a currency like Bitcoin. For example, if you use this calculator, you can see that buying $100 of Bitcoin every month for the last 3 years, you've seen over 102% growth, compared to the 11% growth if you invested in gold, or 10% if you put your money into the Dow Jones. So how does this work? By investing month in and month out, regardless of what the price is doing, you actually mitigate risk by capturing both high and low price points. This is nice because if you buy high one day and then the price drops, it's not really a big issue because you're also going to buy when the price drops, down on that low. So if you're buying all across this price action, it smooths out. It smooths out your risk. This is exactly what I did. This might be the most boring option in crypto, but I can attest myself that buying Bitcoin and taking profits has been one of the best choices I've ever made. Really, still in crypto, most of the money is actually made in the top 10 to 20 cryptos. It's crazy, but it's true. Now, I've made hundreds of thousands of dollars in profit in Bitcoin just letting it do its thing. Why do more work when you don't have to do more work? Like, more action isn't always better. But something to touch on here, if we return to the calculator and put it on the 6-month time span, you can see that it performs worse than the other options. This is a crypto volatility issue, a time span issue. If you zoom out, that risk is obviously mitigated, but there's also other solutions that I'll recommend later in this video. Buying and holding. Another option that works for large caps like Bitcoin and Ethereum is just simply buying and holding in bulk. I've certainly had decent wins from doing this. This is another one of the top strategies that just works. Instead of investing, $100 in Bitcoin over the course of 10 months to equal $1,000, you would just buy $1,000 of Bitcoin all at once. So some people prefer this. And of course it's simple, but I found that dollar cost averaging is the best method for almost everyone, and you might be wondering why I mainly focus on large caps opposed to smaller coins that could see massive pumps. And the reason is pretty simple. Focusing your portfolio on large caps allows you to avoid simple mistakes that countless people lose millions of dollars over every single year. Those are, number one, FOMOing into bad, poorly researched projects. Number two, getting scammed or rug pulled. Number three, investing into overhyped coins that are on the road to nowhere. Number four, overexposing yourself to risk. If you just avoid those, the odds that you make money are much higher. So again, we're just making the whole thing simpler. By focusing most of your money into large caps, you're basically going to avoid these by default, or you're going to have such low exposure to these risks that the losses really won't hurt you. Rules-tested day trading. One of the slightly more complex but more consistently profitable methods I've used and seen many other people use is day trading, which is ironic because it's by far the highest risk method on the list, right? Well, it doesn't have to be. Well, good traders follow time-tested rules that massively reduce the risk they take on for each trade. They reduce their risk to around 1 to 10%, usually hanging around 1%. So if you were trading, you were like, my risk is 1%, you wouldn't say that that's overly risky, would you? Well, that's what they do. They do this by patiently waiting for the market to meet their set rules. So they set up their rules and then they wait. They do nothing. And then once the rules are met, and only once the rules are met, they know that they can go in, get the trade, hit their numbers, confidently strike, and take the profits. That's it. Problem is, most traders don't have tested rules. They don't know where to find tested rules. And then when they do know about the rules, they just don't have the patience to actually use them in the first place. They get anxious and they take more actions than they have to. On FINOVA, we teach all of our members to use clearly defined stop losses, which control how much they could possibly lose, as well as clear risk calculations so they know what they stand to gain. If you know what your risk is and you know what your potential gain is, and then you have a stable win rate, you know how much money you can make. It is just simple math when you do it right and you're actually patient with how you do this. We also have coaches who share and explain their rules and their trades in real time so you can see what the pros are doing. This means members can follow along and grab the same profits and the same controlled level of risk as all the coaches and the other members are doing. So here's some of those profits. Now, I need to say, FINOVA is not for everyone. The ideal person for this already has a good job paying them like $70K plus per year, and they're willing to spend about 1 to 5 hours every week trading. And if that's you, you can simply make an extra 3 to 10K a month, and you should join below. And if that's not you, that's no problem. You can just check out one of the other strategies that I mentioned in this video. Now, if you want to see more about how crypto traders are using those specific rules to rack up huge win rates and full-time incomes, check out this video on screen.